Hello and welcome to this new video. We will be talking about the Shopify stock. Shopify released its earnings yesterday and significantly beat market expectations, rising by more than 20%. If I tell you that the increase from yesterday was just a fraction of what is to come, and you want to hear my reasons and my target price zones, stay tuned. Let's start. Welcome. Shopify could significantly beat expectations and had a year-over-year revenue growth of 21%. If you exclude the logistics business, the company has had growth of over 25% for 5 consecutive quarters. Let's look at the other data to see how strongly Shopify beat expectations. EPS, which is very important, was only expected to be 20 cents, but Shopify delivered 26 cents. For revenue, the company delivered $2.05 billion compared to analysts' estimates of $2 billion. In our YouTube portfolio, I have it weighted at around 8% and the stock is already up significantly. Overall, I'm already up 23% on it, and I believe this stock could double in the portfolio. Shopify is currently my 5th largest position. Now, let's look at the facts. According to analysts' assessments, Shopify has no significant risks. I think this is good because you can still get a relatively small company with no significant risks at a cheap price. Now, let's look at the fundamentals. One of the catalysts in the medium to long term is that Shopify should be profitable by the end of the year, which should shoot the stock price up. When an unprofitable company becomes profitable, the stock price can double or triple. Shopify's market capitalization is valued at around $70 billion and has a PS ratio of 11.1. Looking at the price-to-sales ratio compared to other companies in the same time frame, the average PS is 9.3. Shopify is below that and can easily move into overvaluation. Let's look at future expectations. The future earnings and EPS growth is expected to grow by 50%. If Shopify maintains this growth rate and even beats expectations, it will have a very strong impact on the stock price, especially in the medium term. The future return on equity is expected to be 19.5% and the revenue growth 16.9%. Let's visualize the future growth for revenue, cash flow, and profit. By December, the stock should already be profitable, which will be a very strong lever on the stock. I will later show on the chart how the short-term price development will be. By the end of 2026, revenue is expected to grow to $12.6 billion. Profit to nearly $2 billion, and free cash flow to $2.3 billion. Now let's see how efficient Shopify actually is. At the moment, because Shopify is unprofitable, it is inefficient, but Shopify is trying to become more efficient. The return on equity is still negative at 2.4%, and the return on assets is also negative. The return on capital employed, compared to 3 years ago, has increased significantly. Now let's look at the health. Shopify is very healthy compared to other companies in the same stage of growth. They have a 10% debt-to-equity ratio and $916 million in debt, which is significantly less when compared to cash, equity, liabilities, and assets. With this strength, Shopify can also survive difficult market phases that we are on the verge of. Let's also take a look at the CEO. The CEO is a very interesting man. He is known for his efficiency. Let's also look at the shareholders. The CEO owns 6.17%, which is quite a lot for a co-founder. Otherwise, we don't see the big asset managers, only Vanguard with 3.35%. But Capital Research and Management owns almost 8% of the company. Now let's look at why the Shopify stock can gain several 100% and how high the stock will rise. My important turnaround is between $51 and $68. We have almost broken through the target zone upwards. The target zone was breached on Monday due to the high volatility, but quickly recovered. I also bought Shopify futures on Monday. I have bought the company's regular shares, but also derivatives on Shopify and expect them to rise significantly more. Before I state my medium-term view on how high the stock will rise, I could expect the stock to rise to $100 and form a support, and then experience a brief correction phase before rising significantly stronger again. But that's just my forecast. It is not investment advice. If someone were to buy at today's prices, I would set my stop loss at $45. That would be a potential loss of 31%, which I don't expect. One should set one's stop loss at break-even or higher, so that one still comes out with a slight profit if the worst-case scenario occurs, once the stock has reached $100. If you like the video, subscribe to the channel and write in the comments which stock you want next. Many exciting earnings reports await us. In the medium term, the minimum is $122, which I don't expect. I rather think between $160 and $170, which would be a percentage increase of almost 85% from the entry point up to $120 and up to the upper limit of 151%, which the stock can reach in 5 months. This would be very interesting for traders, but also for investors. I would only take out a part of my profits at these prices because you never know how high the stock can go. Let's also look at the long-term view. The long-term view is that we will break through the $315 mark in the next 3 years. The stock could even go up to almost $500. But time will tell how the stock develops. It is very important that the stock does not go below the $45 mark. And that one brings patience with the stock due to the volatility. From today's price levels, the stock would still have at least 371% to 620% upside potential. It would be more than a 7-fold increase. The stock belongs in every growth portfolio. I hope you enjoyed the video. Until next time.